Hi guys, good morning. A brand new week and starting on a strong footing given the fact that we hit a fresh high on Friday. And the good news is that the Nifty Bank Index also made a fresh high after 55 sessions. So, the growth engine here on could be the Nifty Bank Index given the fact that, it has come out of a painfully long period of underperformance. Of course, this morning the GIFT Nifty hinting at a strong start, but Asian markets in general aren't doing all that well. We don't have any cues coming in from Japan this morning. But Wall Street, of course, Dow futures is down right now. But on Friday, we saw a fresh high on Wall Street as well after, the pivot that we saw coming in from the US Federal Reserve. This morning, lots to talk about, lots of stocks in focus. And of course, we'll figure out as to what are the sectors or where should you be putting in your money at record high levels. But of course, your stock related queries will also be in focus. Keep them coming in on our live feed on YouTube. We'll try and take them up, but do try and send them before 9:30 or so because we will try and take them up within that time itself. But before we move any further, take a look at the top headlines at this hour. Dow capped off a strong 2000 following a 50 basis point rate cut by the US Federal Reserve. Key indices gained over 1% each, with the S&P 500 also ending at record levels. Asian markets kickstart a brand new week on the back foot following a slew of central bank action. Japanese markets remain shut on account of a holiday. The GIFT Nifty, however, is suggesting a higher start for the Indian market. Crude prices rise with the Brent edging towards $75 a barrel mark on the Fed's rate cut and rising tensions in West Asia. Meanwhile, gold rally continues with the yellow metal hitting fresh record highs above $2,600 an ounce. And in key outcomes from Prime Minister Narendra Modi's trip to the United States, India and the US will set up the world's first multi-chip fabrication facility in Uttar Pradesh to make advanced chips for high-technology warfare platforms. Now, PM Modi says the vision is to make India a global hub for semiconductor manufacturing. Well, then, of course, we saw a record run, in the market last week. It continues with the frontline indices, notching record close. Nifty PSU Bank, all the sectoral indices ended in the green last week. The Nifty Bank, of course, hit fresh record highs after 55 trading sessions. In fact, the Nifty Bank index went past that 54,000 mark as well for the first time ever. The Nifty surged past 25,800 in intraday trade, although it shut shop just shy of that level. So we're just about 210 points away from that 26,000 mark. Mind you, the Nifty has covered 800 points in just 7 sessions. So could today be the day when we see 26,000, or could it be in the run up to the monthly F&O expiry? Of course, lots of movers and shakers were there, news driven as well. IFL Finance, for one, jumped somewhere around 7% after RBI lifted its ban on its gold loan business. The good part is even PSU names like Cochin Shipyard, GRSC, that had seen quite a bit of a drubbing after a dream run. Some of these stocks are 30 to 40% away or off their record level. So these also saw a turnaround, with the likes of Cochin Shipyard, GRSC rallying somewhere around 10% or thereabouts. It was the second straight week of gains, of course, for the Nifty. And if you look at the month to date, performance, the Nifty is up somewhere around 3.5%. And the Sensex, the Bank Nifty, I beg your pardon, is up somewhere around 5%. So yes, the Nifty Bank Index seems to be taking the lead. And here on, we will be watching out for the likes of ICICI Bank, HDFC Bank, because some of these counters have started firing up as well. But of course, let's take a look at the F&O Qs then. In terms of the put call ratio, it jumped to 1.5 from 1.26 levels in the previous session. No new additions in F&O ban list, but quite a few stocks are in the in F&O ban for today. The likes of Aarti Industries, Biocon, Chambal Fertilizer, GNFC, Granules India, LIC Housing Finance, Nalco, OFSS, and PNB, RBL Bank, as well as SAIL. The stock that has come out of the F&O ban is just about one stock. It's Birla Soft, and of course we saw a pretty big buy figure coming in from FIIs on Friday. 14,000 crore rupee worth of stocks are bought in the cash market by foreign investors. On the flip side, you had domestic investors they were net sellers on Friday to the tune of 4,400 crore rupees or thereabouts. But on that note, let me bring on board our technical guest for today. Joining me is Prashant Sawant, who's the founder of Catalyst Wealth. Prashant, great to have you on the show. First of all, of course, we have seen record run on the Lal Street, in terms of Nifty in the run up to the monthly F&O expiry. When do you expect 26,000? Do you think today could be the day? Okay, we'll fix up the audio issues with Prashant, but let's take a look at some of the stocks that have been in focus. I want to mention that ICICI Bank on Friday posted its biggest single day gain since 29th of April. In fact, the bank itself has seen a fairly good run, in terms of how the other components of the Nifty Bank Index have been behaving. HDFC Bank as well has cleared that 1700 level quite decisively, because it was stuck in that 1650 to 1700 range for quite some time. So now that it has broken past that 1700 level, just want to touch base with our technical analyst and ask him what are the kind of resistance levels really one can watch out for on HDFC Bank in particular. But aside of that, HDFC Bank will also be in focus because its arm, HDB Financial, has received the board approval for an IPO, and the IPO will include a fresh issue of 2,500 crore rupees. There will also be an OFS component. The other stock, that will be in focus today will be Dr. Reddy's. It has, USFDA has completed the routine GMP inspection, general manufacturing practices, that is at its Hyderabad-based R&D center. This inspection, this was actually closed with 0 observations, so that's a good news. The facility was inspected between September 16th to 20th. Lots of other pharma companies will also be in focus, given the fact that we've had Mankind Pharma. It will raise up to 10,000 crore rupees via NCDs, non-convertible debentures and commercial papers, and these funds will be raised on private placement basis. Aarti Drugs is the other one that will be in focus, because USFDA has issued Form 483 with 7 observations for its API unit in Maharashtra. None of the observations are related to data integrity, but we still don't have the details as to what really these observations are. As and when we get those observations, or when we get hold of those observations, we'll of course update you on that as well. But USFDA had inspected its Tarapur, Maharashtra unit earlier this month. Vodafone Idea, of course, after the AGR setback, we've seen the stock come off quite a bit. But some good news, because the company has concluded a $3.6 billion deal with 3 global network partners. Now, these global network partners are Nokia, Ericsson, as well as Samsung. Remember, the company had raised funds via FPO. There were, that fundraise had allayed concerns about its viability. But now, of course, with the AGR case, coming not in favor of the company, there are concerns as to what the company will do next when it comes to debt raising as well. That will be crucial, because other companies like Indus Towers are also dependent on that, right? Because Vodafone is a tenant of Indus Towers, and it also owes some money to Indus Towers. So, Indus Towers as well has faced quite a few downgrades post this development. And Vodafone Idea, the brokerage, targets have come in as low as 2.5 rupees on the stock. Remember, it did fall below that FPO price of 11 rupees as well. The stock has come under intense selling pressure, and of course, it is also in the futures and options space, right? So, we will be figuring out with our technical experts as to whether or not there is a trade in the counter right now or not. But of course, let's take a look at some of the other stocks that will be in focus. Of course, we have 5 more minutes to go for the markets to open. Let's take a look at BHEL. This stock will be in focus. The company has bagged a 6,100 crore rupee order, a fairly large order from NTPC. It will be a power project. So this stock will be in focus. The other stock that will be reacting is Adani Total Gas. This company has secured global financing in the city gas distribution business. The financing framework enables company to secure future funding based on its business plan. Now, this maiden financing of $375 million million will come in from foreign lenders, and it has got an initial commitment of $315 million from some of these foreign lenders. Now, who are these foreign lenders? They are the likes of BNP Paribas, DBS Bank, Mizuho Bank, Sumitomo Mitsui as well. So yes, Adani Total Gas is one stock that has been focused. Positive news coming in there. But there are some brokerage notes as well this morning. Goldman Sachs, it has initiated, in fact, it has continued with its buy call on L&T Finance, and the target price is at somewhere around 202 rupees a share. In fact, the brokerage says that the management has said that it is seeing better asset quality relative to the industry. Management has maintained guidance for delivering 25% growth. Management is aiming for the return on asset and return on equity of 3% and 15% over the next 24 months. Now, what will drive this guidance? This guidance will be driven by margins as well as fee income in 10.75 to 11.25% range. OPEX or operating expenses plus credit costs are, could be lower than 7%. That is something that would drive a 25% growth according to the company. The company is also, aiming or has a long-term plan of building cycle resilient retail loan book. And what will drive this, cycle resistant retail loan book? It will be technology. That will be the biggest lever for building cycle resilient retail loan book going forward. So that's one stock. Positive views coming in on this stock from Goldman Sachs. So watch out for that counter. The company had also taken note of the fact that there was, a stress building in retail and unsecured lending side of the business, and it was one of the NBFCs that was able to pinpoint that issue at an early stage, and which is something that helped the company. But consumption consumption stocks will also be in focus, particularly the QSR ones, quick service restaurants, because CLSA has come out with a note. It has said that competition in the sample towns, or in CLSA's sample towns, remains intense. Domino's, McDonald's, all of these have lower share in incremental ratings, according to the Zomato data. Pizza category growth has improved since February. That's what Zomato trends data is indicating. Domino's, however, continues to lose market share despite growth. That's also according to the Zomato trends data. Of course, in light of that, Jubilant Foods could be in focus in today's session. Watch out for that counter. The CLSA has also pointed out that high competitive intensity in pizzas and burgers will continue to mar some of these, QSR companies. It has maintained an underperform rating on Jubilant Food and Westlife as well. But it has maintained an overperform rating on Restaurant Brands Asia. Of course, we will be getting you expert views on what you should be doing or how you should be really navigating the market here on. But just about 10 seconds to go for the market to open. Just want to see how the Nifty is about to open. Of course, 25,870. That's the level I can see in pre-open, 75-point uptick. And of course, a fresh record high as well, inching towards 25,900. Looking at, the Sensex, that's up somewhere around 150 points or thereabouts. 84,600 is where it's at the current juncture. So, fresh records for the Lal Street, 150 or less than 150 points away from the crucial 26,000 mark on the Nifty. The mid-cap index is also, moving in tandem with the benchmarks. But the Nifty Bank index, cooling off a bit after hitting 54,000 in Friday's session. No real trend emerging when it comes to the Nifty Bank index right now, but it has started off on the back foot for now. Let's take a look at what some of the other sectors are doing then. I just want to see what the IT pack is doing, because IT per se has been an underperformer. It has started underperforming after hitting fresh highs. So, let's see what other sectors are doing. Auto, that's taking the lead today. 2.5% uptick. Remember, M&M had a fairly good run on Friday. It was the top Nifty gainer and gained in excess of 5% on Friday. We'll just take a look at the components of the auto pack as to which stocks are leading the gains. But auto pack, zooming ahead, 2.5% uptick coming in there. I think the Nifty Bank index isn't really showing the correct rate here. We will see how that is also going. But the Nifty Bank index has edged back into the green, trading very flat as we speak. In terms of the other BSC sectors, want to see what the IT pack is doing. It's trading with strength today. 0.7% kind of gains on the BSC IT index. The BSC Realty pack is also firing up, 4% gains. I just want to see if these rates are actually correct. But in terms of individual movers, then let's take a look at what's really driving the Nifty right now. 4%, 2% gain for the for M&M. That's the top Nifty gainer. Bharti Airtel, Shriram Finance, Bajaj Auto, SBI Life, Divi's Lab, SBI Life, L&T. These are some of the gainers on the index. Tata Steel as well. Up and about. There has been a corporate development in the stock and in the company rather. So that stock is up and about. Life insurers doing well. Bajaj, Finserv also among gainers. HDFC Bank, another 1% kind of an uptick. HDB Financial has got the in principle nod from the board for an IPO. You have Cipla also doing well, 0.5% gains. Reliance Industries 0.5% higher. Dani Ports, Dr. Reddy's, these are some of the other counters. But let's take a look at the losers as well. List isn't all that big when it comes to the losers, but ICICI Bank is cooling off a bit after a good move on Friday. So that's the top Nifty laggard. IndusInd Bank is a close second, and some of the IT names continue to remain under pressure. The likes of HCL Tech, Wipro, Infosys, TCS, LTI, Mindtree, all of these counters are trading in the red. Even the names from FMCG pack like Hindustan, Unilever, Nestle are in the red. But let's see, do we have any guests ready at the current juncture? Okay, Prashant is finally with us right now. Prashant, great to have you on the show. Looking at the market, we are of course at record levels, less than 140 points away from 26,000. Do you expect the Nifty to pick up pace and hit that magical mark, 26,000 today itself?
Very good morning. So I think I would be a little cautious here looking at the opening, and we are nearing a resistance. I think if we talk about 26,000, we are hardly say around 120 points away from that level, and for that I would not like to risk the good move that we have caught for the past 3 4 days. So I think the logical approach would be to trail, and what should be the trailing levels according to me for Nifty, which is currently the spot is trading at around 25,870. Your trailing stop loss has to be around 25,750, which is around 100 points from the current price, so that if there is any major resistance at the current level, your profits are booked at a decent level. Similarly, the approach for Bank Nifty has to be the same. We are currently around 53,840, 850 in terms of spot. Your trailing stop loss has to be around 53,500, 53,550, and you can hold your existing longs. I would strongly suggest not to go fresh long at the current level because the risk reward is not justifying. So the better approach would be stock specific rather than approaching the index from a long perspective at the current level.
Okay, what about an HDFC Bank? What are the kind of resistance levels one should be watching out for there, given the fact that it has broken above that 1700 level quite decisively now, right? And of course, there is some news flow also around the company. Its arm, HDB Financial, has got the go ahead for IPO. So here on, do you expect the stock to remain above 1700 levels?
So I think it has given a very strong move. Second thing is the price is backed by strong volumes, which clearly show that strong hands are in control. I think the logical approach at the current level would be to hold your existing longs with a stop loss around 1730, 1735 spot. I am expecting this particular stock to reach levels around 1760, 1765. From there, you may get the next dip, which would be a good opportunity to add. So at the current level, hold your longs, and any dip in the stock going forward in the week, say around 1730, 1735, would be a good zone to add fresh longs.
Okay, and what about Vodafone Idea? Shifting focus from banks to telecom. Vodafone Idea, of course, the stock has come under immense pressure after that AGR verdict didn't go in its favor. But there is news flow around the company, of course, inking a mega deal with three global telecom players. Here on, do you spot a trade in this counter? Not for the long term, of course, but for the very short term.
So I think this is one area where people have been speculating a lot, and I have been continuously guiding my clients as well as everyone not to be a part of this particular counter till it doesn't stabilize, say around 14, 15 zones. A better way to participate in this sector rather is to participate in stocks like Bharti Airtel, which have been going giving a one-sided move. So I think just because a particular stock looks cheaper in terms of price, I'm not talking about valuation. In terms of price, it's a two-digit stock. A lot of retail people are fond of this. My strict suggestion would be to avoid it and better wait for a dip in Bharti Airtel to go for a fresh level of long. It's always advisable to buy strength rather than buying weakness.
Okay, but as of now, the stock has once again edged back above the FPO price of 11 rupees. Since I have a query on this stock on our feed, I just thought I would address it. Varsha Gajjar is making a loss here in Idea. Uh, should she use this bounce to get out of the counter?
Well, I would definitely say it would be apt to if your investment is big and you are able to get out somewhere near cost. I would say it would be a logical approach to exit and wait for the stock to stabilize or invest it in some other good opportunity. But I don't see a good level of, or rather a good price action. In fact, if you look at the move for the past 10, 15 days, every time the stock has consolidated, after that, there has been a fresh round of selling. Other thing which is noticeable in the volumes on the selling have been very high. So I think it's better to avoid it. I understand that it's currently above the FPO price, so a lot of people would be having a temptation kind of to enter and keep a stop loss around 9.5, 10. But my suggestion would be to strictly avoid it.
Okay, that's the view. Let's shift focus to autos as well. Very strong traction in the likes of M&M. It's in fact made a fresh 52-week high today itself, 3019 or thereabouts. Even two-wheelers like Bajaj Auto and Hero have had very strong traction, right? So, four-wheelers and two-wheelers, where is the risk reward, relatively attractive now?
So I think one stock that looks currently at a good level in terms of a fresh entry is definitely TVS Motors. It's at a resistance, but if you see the volumes on Friday when the stock took support on 20 moving average, were excellent. They are popping out of the chart. So I think one can look for an attempt here. We are currently trading around 28.50 spot. You can keep stop losses around 28.30, which would be a 1% risk. Look out for targets around 2900. I think this counter has been doing really well. It's been into a series of higher tops and higher bottoms. Every time it has dipped to the 20 moving average, you have got a good move. So I think this is one area people can focus upon.
Okay, that's the view. TVS Motor looking good from the auto pack. But let's talk about a BHEL as well. It has bagged a very large order from NTPC to the tune of 6,000 crore rupees. The stock is reacting, but of course, some of these PSU names have come off quite significantly from their highs. Would you say that it's a good time to look at these stocks at these levels? After the dream run, some of these stocks are actually 40 to 50% away from their all-time highs, right? So, from a risk-reward perspective, is it a very opportune time to re-enter?
So I think the word that you use, risk reward, you can just bring that into play and keep a strict stop loss. I think you're currently trading somewhere around 270. Your stop losses have to be 260, 262 spot closing basis, and you can start with a small quantity. If the trade sustains and you are able to cross the levels of 280, I think then you can add more position because then the stock may show momentum about 280. So at current level, just start with a small quantity in cash, and your stop losses have to be in the zone of 260, 262.
Okay, that's the view then on BHEL. But before I move on to our stock-related queries, want to get in your thoughts on a Mankind Pharma. It will be raising funds, 10,000 crore rupees via NCDs. On a private placement basis, the stock is up 3.5%. Also hit a fresh 52-week high. So, how should one really go about looking at these counters? Should people book partial profits and take some money off the table?
Yeah, definitely. I think that would be a logical approach. You're trading at the new high. So currently you're around 26.20. You can keep a trailing stop loss at 25.95, which is hardly just 1% below and below a round number of 2600. And I think your profits would be at least 40% of your position you can book out and hold the rest with stop losses around 25.50, which would be a good way to trail and at least take some money off the table.
Okay, that should be the strategy for a mankind. But let's shift focus to some of the queries that are trickling in this morning. Then I want to take up the first query on GE shipping. Renukeshwar holds 30 shares at the rate of 1416 rupees. Wants to know whether it should be held on to for the next 6 months or should it be averaged at current levels. The stock is at 1232. His buy price is, of course, higher than where we are at right now.
So I think first major difference we have to make in terms of our investing or trading is when a stock is trading below your buying price. You should not be looking at holding it for 6 7 months. You should be having a clear level as your stop loss. So my recommendation would be you are currently trading around 1220 in terms of the price. So your exit point has to be around 1190, 1195. If you break that zone, you need to exit and you need to respect the fact that you entered a wrong stock and maybe wait for the next opportunity or look out for a better stock. So currently for GE shipping, your stop losses in the system have to be closing below 1190, 1195 zone.
Okay, that's the view. Hope that answers your query. The next query is coming in from Abhishek Das. Wants to know your thoughts on HPCL. And he wants to know whether before September month expiry, we could see 420 levels on the stock price or not. Of course, we had that crude tailwind when crude fell, Brent crude fell below that $70 mark. But, Brent is once again around that $75 per barrel mark. And then, of course, there were talks about a fuel price cut as well, whether there will be a decision on that, what will be the quantum around that, because that of course will not bode very well for OMCs, right? But in the last 5 sessions, we've seen HPCL down somewhere around 3% or so, trading around that 400 rupee mark. But would you stick your neck out and say that in the next 3 to 4 sessions, till about Thursday, we could see 420 on the higher side?
So I think the question is very clearly asking me one thing indirectly. Can I buy the option of this and can you see 420 price in 3 days? My simple answer would be no. Don't speculate in terms of option. You are at a good support in terms of price. So I think currently the stock is within striking distance of 400. Your stop loss can be kept around 385. You can add positions in cash, but my strict suggestion would be do not go for options. It is not an option trade. To buy option, you need to have momentum because your query is clearly indicating that you are looking out for an option trade. The better approach is buying cash, keep a stop loss at 385, and hold on for targets around 420, 425 as a swing trade and keep a positional approach.
Okay, that's the view. Avoid option trading here with that level in mind. That's the advice coming in from Prashant. But Prashant, let's shift focus to the pharma pack then. Query from Sham Sundar wants to know your thoughts on Dr. Reddy's and Natco Pharma. Should we wait for more correction or buy now? We have seen some bit of correction in pharma, right? If you see the last 5 sessions, Dr. Reddy's has given negative returns, not a big correction per se, but the stock has been under pressure in the last 1 month as well, 5% lower. Do you see some bit of more weakness here, and should one wait it out or should one buy now?
So I think if I were to select one in this, my choice would be Dr. Reddy's at the current level. You are trading around 6620, 6630. You can keep stop losses around 6580 zone, 6580, 6570, which will be a 1% risk. And you can look out for targets around 6750 to 6800.
Okay, that's the kind of target to watch out for. Hope you've taken note of that. Uh, the next query, let's take up a query on Anant Raj Industries. Krishna has written in, he's holding 400 shares at the rate of 620 rupees per share. Wants to know what should his strategy be right now. Would you advise him to stick to it, or would you say, get out of it and look at some better opportunities in the market?
So I think he's in decent profits in a quick span. So I think the logical approach would be to book out around 30 to 40% and trail the rest. Your trailing stop losses have to be around 680, 685. So even that would be a profitable exit. So you're booking out around 40% near to the top and still trailing the rest above your buying price. So keep that approach and hold it. And later on, you can keep raising the stop loss by 10 to 15 points on a daily basis.
Okay, that's the advice coming in. Take note of it. The next one is coming in from Srivardhan Gupta. Wants to know your thoughts on Goldiam International. Till the end of the year, he has 1500 shares at the rate of 190 rupees per share. He's making very good profits here. Uh, what should he really do?
So I think it's better to hold on and keep trailing stop losses at 340 rather than booking out. I think this stock has a potential to target somewhere around 390, 400. So current levels trail with 340. Once you reach the 380, 385 zone, you can book out around 30-40% and hold the rest.
Okay, that's the view then on that particular stock. But quickly moving on to the next one, Prachi has written in. She wants to know your thoughts on a Rushil Decor for the short term. The stock is up, has seen in fact good traction in the last 5 sessions. Would you advise looking at this particular counter?
I would not because I think it's been too. If you look at the moves, they are not in a way that you can manage the position. My approach would be to look out for better opportunities, stocks which are moving calmly rather than stocks which are showing wild swings. So I would avoid this in the current, looking at the current price patterns.
Okay, that's the view. Next one from Utsav Jain wants to know your thoughts on Hindustan Aeronautics, where he's making a loss of 9% on his holding. Uh, is it a good idea to average now, or can the share see more downside? But last week we saw some traction returning in some of these PSUs, right? I think for the last week, HAL was up somewhere around 2% or so, if I'm not mistaken. But of course, we saw the likes of GRSE, Cochin Shipyard, show very good moves on Friday. Chartically, is the worst over? Do you think most of these counters have entered oversold zone, and here on we could see some uptick, or do you see more downside?
No, I see more downside in the counter. You're currently around 4,400. I think you need to keep a strict stop loss at 4,370. And if that breaks, you need to respect and exit from this counter.
Okay, that's the view then on HAL. But I think with that, we've come to the end of the query segment. If you couldn't take up your query, don't get disheartened. We'll try and take them up tomorrow. But Prashant, before I let you go, what would your trading picks be for today?
So I think, as I said right at the beginning, that I'm having a cautious approach, and I would be a slightly selective. But if you currently look at the price pattern, one of my picks is TVS Motors, which we just discussed at the beginning of the show, around 2850. Currently, it's trading around 2870. So already it has moved 1% in our favor. So I think that's one area you can look at. And one more stock which looks at a good level is IOC, Indian Oil Corporation, currently quoting around 168, 169. You can keep stop losses around 164 and look out for targets around 174, 175.
Okay, then TVS Motor as well as IOC. These are the picks coming in from Prashant. With that, Prashant, thanks a lot for taking out time and joining in this morning. Of course, always a pleasure chatting, and look forward to more interactions as well.
Thank you.
Well, on that note, let me bring on board our next guest for today. Joining me is Mayuresh Joshi, who's the head of equity research at William O'Neill India. Mayuresh, okay, we will come to Mayuresh in just a bit. There's been some audio issue there as well, I guess. But let's take a look at what the markets are doing. It's a triple-digit move on the Nifty. We have cleared that 25,900 mark, just about 100 points shy of that 26,000 mark. Whether or not today would be the day or a little later in the week, but we are heading into the monthly F&O expiry, and looks like ahead of that, we may be poised to climb or conquer that Mount 26,000 level as well. But the mid cap index has also picked up traction, up 0.5% or thereabouts. Now it's back above or cruising above that 60,000 level. Bank Nifty as well has picked up a little bit of traction, so 0.2% kind of an up move on the Nifty Bank Index as well. Just want to see what other sectors are up to this morning. Autos as a pack was doing well. I want to just pull up the Nifty Auto Index as well as we speak. On my screen, it's showing that the Nifty Auto Index is up somewhere around 3% or so. Just want to check the rates as well as we speak about it. The Nifty Auto Index, that's taking the lead because M&M continues its up move. It continues to zoom ahead, hitting a fresh 52-week high in today's session as well. The Nifty Auto Index, in fact, is up just about 1.5% and not 3%. But of course, nevertheless, it is among the top sectoral gainers at the current juncture. In terms of individual movers, M&M remains among the top two performers on the index. 2% up move after a 5% up move on Friday. We have Bharti Airtel that's taken the lead now in terms of the top movers on the Nifty, 2% higher for this particular counter. SBI, mind you, SBI was stuck in a downtrend, right? Ever since we had that brokerage call with a sell rating on the stock has been under pressure, but today it has managed to stage a good comeback, and it's above that, in fact, very close to that 800 level as well. You had BPCL also doing well, although Brent crude is somewhere around $75 a barrel now. ONGC among gainers. So Energy Pack is also doing fairly okay today. Cipla, Divi's Lab from the Pharma Pack doing well. Bajaj Auto from the Auto Pack doing well. Life insurers also having a good run, and so are some of the metal counters like Tata Steel doing well today. But in terms of losers, then just want to see which are the losers in today's session. ICICI Bank cooling off after a good run on Friday. Hindalco not participating, and so is Aisha Motors. Tech names continue to underperform. LTI Mindtree, HCL Tech, Wipro, Infosys, all of these counters are under pressure today. And ITC and Britannia from the FMCG names, from the FMCG pack rather, are not doing all that well. The mid-cap index, of course, as I mentioned, is cruising along above that 60,500 mark. Just want to point out some of the movers and shakers from the broader end of the markets as we speak. Just on the Nifty 500 index, in terms of movers, we have Godfrey Phillips after a good run. This stock is under pressure today. You have other counters as well, the likes of SBFC Finance. That's the top gainer on the Nifty 500 index. Vodafone Idea, firmly above the FPO price now, of course, on the back of that deal. On the back of that deal with three telecom majors, the stock is up somewhere around 10% or thereabouts. Glenmark and Asahi India are some of the other movers. But on that note, let me bring on board our next guest for today, Mayuresh Joshi of William O'Neill India. Mayuresh, always a pleasure chatting with you. Just want to ask you, we're just about 100 points away from 26,000. We were talking about year-end targets of 26,000, but of course, it's just September and we are already looking at that level right now, right? So here on, do you see levers for more up move, or do you think the returns will be fairly capped at around 26,000 by year-end?
Morning, Nandita. So I think the liquidity in the market is ensuring that the markets probably are in strong momentum that we are probably seeing. And it's not just for the main indices, you can also see the broader markets are outperforming quite handsomely. Obviously, I think to take a case here, because we are in uncharted territory right now, and obviously, I think two things obviously come back to the fore. How earnings are going to play out over the next few quarters, and based on the earnings estimates, how forward price earning multiples are expected to play out. Now, general consensus, Nandita, is that around 12 to 14% earnings growth over the next couple of years is something that the street believes that the index can probably deliver. Certain sectors, certain stocks can deliver more than that. But to that extent, if you probably look at the expectations of the Nifty EPS as far as FY26 is concerned, consensus estimate is around 1250, 1300 odd, which means Nifty is trading around 21 odd times, 12 months forward rolling numbers. And therefore, I think it's the market is obviously not too cheap. The market is not very, very expensive, and obviously, I think the premium valuation that India is getting is based on our macros and micros as well. And to that extent, I think one should have a sector and stock specific approach in the markets. With the liquidity that is there in the markets, a structural downside probably looks limited at this juncture. And with the Fed probably cutting rates and the commentary thereof, it is suggesting that if the US has a soft landing, fund flows can probably come back as far as FIs are concerned.
Right, of course, and FIs have actually made a good comeback as well. We had a buy figure of 14,000 on Friday itself, and even in the month of September, some in excess of 30,000 crore rupees or thereabouts. But what about what the RBI is expected to do here on? Do you think that alignment could happen in as early as October, or do you think there is no need as of now, and perhaps December is when the RBI could actually come out with a 25 basis point rate cut?
So I think that's a structural call RBI will take, because looking at data points, inflation is probably under control at this juncture. We've had a decent monsoon, and therefore I think the expectation largely in terms of a good Kharif output is something that India Inc. should probably expect. And in text itself, the expectation in terms of rural discretionary spending coming back might be a base case scenario. Having said that, there is ample liquidity, Nandita, in the market as we speak. So I think we've got a 2 lakh crores of liquidity that probably exists in the market. And therefore, I think RBI will probably take in its own stride how data points are probably looking at. But following the Fed, again, I think there are sufficient levers for central bankers across the globe, ex Japan, to probably start cutting down their rates. And our own expectation is that by December, you should at least see one rate cut from the RBI.
Okay, got it. Point taken. What do you make of the recent underperformance in IT, Mayuresh? Of course, the index did hit a fresh high, and since first quarter numbers, IT stocks have done fairly well. Most of the stocks are actually at a premium to pre-COVID levels as well. And given the fact that most of them have given good outlook going forward, and then there has been a rate cut as well in the US that bodes well for discretionary spending. So, do you think this correction that we are seeing or underperformance that we are seeing in IT is just transitory, or do you think valuation-wise things have become very expensive and here on there'll be a little bit of a cool off and all the good news is already in the price?
So price action has been pretty strong, and valuations generally for large cap ITs, you're rightly pointing out, Nandita, I think above the standard deviation averages. Mid cap even far higher than what we compare on a 5 year rolling basis. Having said what probably is expected to happen, I think in the second half, when a lot of discretionary spending patterns will be determined, how the US economy is actually faring up is going to be very interesting. So I think if it's a soft landing that most analysts are believing on the street, discretionary spending across key categories and key segments like BFSI, retail, manufacturing should come back very, very strongly. And if that probably happens, that will translate into better order flows, both for large cap IT companies and mid cap IT companies as well. Obviously, the transformational landscape that we are probably seeing in terms of AI, generative AI, is going to ensure that companies embark on this journey, and outsourcing firms, which is our IT companies, should benefit quite significantly. You're also absolutely right, Nandita, that a lot of management commentaries have been very, very positive, specifically as far as mid-cap IT is concerned, in terms of the revenue growth in dollar terms or constant currency terms, stability in margins, expectations in terms of pricing related to order flows and stable order flows as well. So that does account for stability in earnings expectation that can come through. And Europe, if it comes out also of its slumber, that geography should also start contributing. Obviously, valuations is a different ballgame altogether for these stocks. Price action has been, as I said, pretty stark. A lot of these stocks are moving in late stage basis. And therefore, I think fresh investments, I think investors should wait for declines, see how the landscape probably evolves over the next quarter. But investors holding positions in stocks can continue holding. But watch out on commentaries as they evolve over the next couple
I cannot not talk about what's happening in the telecom space, especially with respect to Vodafone Idea, right? After the AGR setback, we saw, knee-jerk reaction on stock prices, and brokerage houses also coming out with like 2.5 rupee kind of targets on the stock, right? But there has been a development. We've seen the company inking a mega deal with three global telecom players. Uh, around these developments, do you still see a threat to its viability? Do you think, concerns over duopoly are back after the AGR setback, or do you think, things will stabilize and, after the FPO, of course, concerns of duopoly were laid to rest? Here on, is there any such expectation?
So I think it will largely play out on in the next few quarters. Obviously, they've got a huge debt burden on their balance sheet. At the same time, they have to upgrade their network bandwidth. And so I think a large part of the network is still on 2G. So I think a large part of their capex towards 4G and 5G will entail that. Additional capex might take a toll in terms of cash flows, along with the debt repayment and spectre repayments as well. Obviously, I think they are operating out of key circles right now, and their primary objective to maintain their subscriber base, at least in these key circles that they are operating out of, and providing superior service. And therefore, I think balance sheet woes, cash flows, again, will be very, very tight as far as Vodafone Idea's balance sheet is concerned. And therefore, I think it will take time for repair on the balance sheet to probably happen. It's not going to be an overnight process. It's not going to happen in a year or two. And therefore, I think this will be a long, drawn out process that will probably happen, which will also play out in terms of numbers as well. So I think don't expect some magical rebound in numbers to start taking place. Tariff, yes, have been undertaken by all telecom operators at this juncture, but a large part of tariff hike, specifically in Vodafone Idea's case, will probably go in terms of either debt servicing or debt repayment. So to that extent, I think the repair will take a long periodicity of time. The sustainability and viability will probably happen in Vodafone Idea's case, but I think the next few quarters are going to be extremely crucial in terms of their balance sheet dynamics.
Okay. Lastly, Mayuresh, when we started this conversation, you said that one has to be very sector and stock specific. So at these levels in this market, where should one really focus? Everything is getting so expensive.
Absolutely. And therefore, I think our take is that key sectors where earnings growth should remain stable: infrastructure, manufacturing, a few key themes within that, waste, water management, a few auto ancillary companies. And obviously, I think the financial space as well. Yes, a lot of them have been drawn out in terms of deposit growth, and those remain concerns for the industry as a whole. But generally, I think if India has to grow over the next decade in excess of what we have grown in the past decade as well, financial inclusion and financial institution has to be key as well. So I think leadership within this space is should be kept on your radar. So I think these key themes, in my opinion, should work out for India as we head into the next decade.
Right. Point taken, Mayuresh. With that, would like to thank you for taking out time and joining in and sharing your thoughts. Always a pleasure chatting with you, and hope to connect with you sometime soon.
Sure, always a pleasure. Thanks. Thanks.
Thank you. Thanks a lot. Well, of course, good news from the Lal Street, of course, 25,900 on your screens, just about or less than 100 points away from that crucial 26,000 mark. Banks have also picked up traction after a muted start. Mid caps doing well, in fact, outperforming the benchmarks. And as we speak, autos, as a pocket doing well. IT is, of course, under a spot of bother, but nothing really to worry about. Turning out to be a good Monday, no Monday blues, so to say, on the Lal Street this morning. But of course, with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Of course, I'll be back with Closing Bell at 3:30 p.m. So don't forget to tune in. Until then, of course, stay tuned to Money Control for all your other news and updates, and have a great trading day.